13F filings have started to come out. And today I want to take a look at Terry Smith, Howard Marks, and Seth Klarman. There are a lot of successful investors here, but I do not follow everyone unless I can understand what they're doing, unless they also are outspoken either through books. So I just want to understand their investment philosophies, how they think about investing in the stock market. And yeah, unless they are outspoken, I'm not going to follow them. I'm not going to try to understand them because I'm not going to try to read their mind. Why have they bought something? Why have they sold? So yeah, I'm going to take a look at Terry Smith because Terry Smith, he is very public with his fund and what he does. He doesn't present the data to his shareholders. He manages a fund of over $20 billion. Let's see here. So $23 billion. It used to be higher. I think almost over 40 billion. Let's see here. History. But yeah, he had a rough patch. So yeah, 2021, he also got pumped. His investments got pumped in this era because he had a lot of tech stocks. And since then, he has not recovered, which is a shame. I mean, when I say recovered, I'm not talking about his performance. I'm talking about his AUM, assets under management. I think a lot of people had given up on him, which is just stupid. I mean, yeah, I think he's still doing a lot of right things, even though he has been underperforming. A lot of people have been underperforming because they haven't held Nvidia or Palantir. So anyway, I always take a look at Terry Smith because I can understand him, and not only that, but I've learned a lot from Terry Smith, and I also have a huge overlap with my portfolio and his. So I have a high correlation with his stock investments. So I'll always take a look at what he is doing, and maybe I get some new investment idea, or maybe some signal that makes me look deeper into some company that I own and find maybe some problems. But anyway, so one thing to keep in mind, whenever people withdraw money from the fund, he also has to sell those stocks in order to give the money back to the investors. So whenever you see here a reduction of 0.3%, 0.5, 1%, this is not selling. This is just people withdrawing money. But whenever you see something like 8% here, this could also be a portfolio adjustment, like a rebalancing of portfolio, because he has this rule of not going over 10% with any of his one company investment. So for example, here Microsoft and Meta is going to be reduced every single quarter until they get it under 10%, which is a shame because yeah, it's just going to hurt a lot. It's going to hurt his investment returns quite a bit. I mean, you know that saying, if you cut the flowers, don't cut the flowers and water the weeds. I mean, it's just not gonna let your winners run, So I do follow the stocks he's investing to get a lot of ideas. He does present his thoughts in a very simple manner, and I can understand him very clearly, and I can learn a lot from him. But my investment strategy, when to buy, when to sell, that vastly differs from him because I don't have the same restriction as he does. And yeah, I can be a lot more concentrated. I can take profits a lot later and take bigger, fatter profits. But yeah, anyway, this Philip Morris position, he has reduced by 16%. This one is probably not a rebalancing, but he actually takes a lot of profit here because let me show you. Philip Morris was up more than 100% at some point. I wasn't invested in Philip Morris. I was invested in Altria. Altria has done okay, not quite as good as Philip Morris, but I do think I'm much more content with my Altria investment. So let's take a look here. From the bottom in April 2024, managed to go up more than 100%. So of course you want to take a lot of profits here. I mean, the company has gone from 100 and something billion dollars to more than 250. Of course you want to take profits, but yeah, I guess he's not even taking enough profits. I would take a lot more. But yeah, let's take a look at some more stuff here. So this is just noise, even though it's with red. Zoetis, he has added a little bit. This is interesting. I just bought this. I think it's time because it's been going sideways for a long time now. And yeah, 2021. Let's take a look at the whole graph. So it's been going up nicely. This industry is growing a lot, and it also pays a dividend. This is quite a mature company. But after the 2021 pump, it crashed came down to earth, crashed by more than 45%, let's say, and then it's just been going sideways since. For the past more than 5 years, the price action has just been going sideways. But it's slowing down a lot, and I think it's just time, It's hit his head. The company has hit his head around this price level. 145 in 2021, 133 2022, that was the bottom. 156, 146, 148, and now 147, 145, 146, 144. So yeah, I mean, around this price level, it seems like people are interested in buying it, and there are no more sellers. So since September 2024, went down 25%. Yeah, the fundamentals of the company have been improving over the past 5 to 6 years. Of course, it has been growing. It has a very high margins. It's a very high quality company. I like it, and I think it's just time to buy it and own it. Now Terry Smith, I think he has owned it since before 2021 and has not been taking profits, I don't think. Let's see. Actually, no. Look at this, 2.5 million shares. Yeah, he has been owning it, but had a very small amount. And all of a sudden, yeah, Q1 this year, he has added 1000%. So went from a very small, insignificant, like a test position, like a monitor position, I would like to call it, just as a monitor, just so you don't forget about it. Yeah, he has poured in quite a bit of money. Reported price back then 165, let's say, and he has added more at around 155. My own price average is 148. So yeah, I bought it, and I'm just gonna hold it for a couple of years until it picks up, and I can hopefully double my money, maybe 67. It's gonna be hard to go from 67 billion to 120, but I'll probably start taking profits when this reaches 90 billion, and then I'll keep my initial investment, see where it goes. But yeah, anyway, let's take a look at something else. What he has been Intuit. He has doubled this position as well here. Yeah, I don't really like Intuit. It's always been very expensive, and stock-based compensation is very high, and the growth is not super amazing for the price that you pay. If you bought it in 2022, when after it crashed and went sideways for a while, yeah, or maybe here when it went sideways for more than a year, and hopefully he has bought it before the pump, before it went up 44% or 40%. But yeah, I'm not interested in buying it at this point. Vertiv, this is a data center company. Interesting. Vertiv has also been going up a lot since April this year, from $60 to 145. Yeah, that was a massive, massive pump. So I'm not even gonna look into it. It's way too late now. It just appeared on his portfolio. I know about the company. I have it in my basket of other data center companies like Equinix, Digital Realty, and even other companies that I think are related, such as CCI, Crown Castle, and SBA Communications, even though these are companies that offer a tower, how do you say it, tower space on the buildings, whatever. I'm not gonna get into it here. Doximity, I bought it and own it, and I'm up 10% on the position. I'm looking to hold it for quite a number of years. I was involved before with Viva, I think the competitor or something like that. Maybe they're not direct competitors, but yeah, I did buy it around here, around 2 years ago. Took a bunch of profits, and now I am invested in Doximity. I think they are a small market cap, higher growth company, and presents a much higher opportunity. I already made quite a lot of profit on this. I think on one of my trades I was up 100%. I may pause the video and just pull up the screenshot here so people don't think I'm just eating shit when I'm talking about this stuff. Yeah, so I'm back here with a screenshot. Let's just put it in a different background so you can see it. So I bought Doximity at 28 in late December 2023, and I sold it at 55 for almost 98%, almost 100% gain. Sold it in 2025, earlier this year after it went vertical. So at 55 here, no, actually here. Where did we say? 22 of January, so let's find January 22. So yeah, unfortunately, right after it went up another 40%. But it's been going sideways since, and I jumped into it again. Um, After it corrected quite a way. I think it has another leg up, quite a few legs up to go here with this company. But yeah, anyway, Manhattan Catalyst Pharmaceuticals. I'm also invested in this one. Manhattan Associates. Unfortunately, I was very interested in this company. I have never been invested in it, and I missed the opportunity. These very high quality companies that are growing a lot. I mean, you just have a very short timeline, a very short window of buying them. Hopefully, it crashes again, because it's been going up 40%, actually 58% from the bottom of April. So yeah, it dropped like a rock. It dropped very nicely, and I said, yeah, more than 50%. I don't know why I didn't put that. But as you can see, V-shaped recovery, it's very hard. I mean, if you're busy in this trading, in these trading days, I mean, you would have never even got the opportunity. But yeah, I don't have any type of how should I put this? Maybe I should make some type of software that is just gonna give me an alarm whenever my the companies that I really want to own over the long term are dropping by a lot. So I don't miss them. Yeah, it's very easy to miss. I mean, you just have such a short time to buy it. I mean, yeah. Now it's been going up a lot. I would say you have missed the boat on it. I don't want to touch anything that's going up already and has been going up 50, more than 50. I mean, I'm there's no way I'm buying it right now. Yeah, anyway. He has been reducing VeriSign. This is another company that I have been invested in. I also took a lot of profits because it was going vertically. Very high quality company, huge moat, tank of a company that also Warren Buffett owns. So yeah, it was going sideways for many years, and I said, yeah, this is looking ridiculous now. They have bought back a huge amount of shares. I bought it at around 170 something, 175. I don't remember exactly. It got a huge pump earlier this year, and I just sold out of it. And it seems like Terry Smith has also been taking quite a bit of profit, which makes me happy. I think, even though he doesn't fall, even though I have a very different strategy when it comes to buying and selling, he has this philosophy of do nothing, doing. I don't think that's correct, of doing nothing, especially when the price just explodes out of control in a very short period of time and you had quite a significant position in it. I just don't think that's correct. I think you should be taking profits. And from my experience, every time a mature company goes up by a lot in a short time, it's just going to be trading at least sideways for quite some time, or have some sort of correction. They're not just going to double again and triple and be like Nvidia, because most companies don't have the growth of Nvidia. So anyway, that was Terry Smith, Funsmith. I really like Terry Smith, and I know some people started to hate on him because he's been underperforming. I don't think he's been underperforming. I think everyone has been underperforming because, yeah, not a lot of people are invested in Palantir and Nvidia. So if you haven't had those two companies with a significant part of your portfolio, you're just gonna underperform. So, yeah, a lot of YouTubers have had success. Actually, they haven't, because they're not going to show you their portfolio, whether or not they have actually bought the shares. But yeah, people think that because some company within the S&P 500 has gone up by a lot, and if Terry Smith doesn't own it and he has not catched it, it means that he's a bad investor, or that he underperforms the S&P over time, or something ridiculous like that. That's the most stupid idea I've ever heard. I mean, that's just not true. I mean, at some point, Nvidia and Palantir are going to cool off like really well. They're going to cool off significantly, and then Terry Smith is going to outperform again. So, but I think he's been doing quite well. I don't. He has been at least in line with the S&P, which is, in my opinion, really good when you haven't owned Nvidia. So now Howard Marks. Howard Marks, he manages over $100 billion hedge fund, and he's mostly dealing with high yield bonds. If you don't know Howard Marks, I recommend you go and search for Howard Marks the memo. He has been writing these memos or just interviews with him. I love this guy. I love the way he talks. I love his investment philosophy and what he thinks about just investing in general and how to make money in the stock market. Even though he's not mainly a stock market guy. He's just investing in the high yield bonds of companies, actually, corporate bonds. So you could say he's invested in the stock market, but not directly in stocks. He doesn't buy stocks. But yeah, his portfolio, he has very, very, very little correlation with my own portfolio and my own style of investing. As you can see here, he has 17% in Torm PLC, which is some type of oil and gas company, Expand Energy. So yeah, a lot of Vista Oil and Gas, Freeport McMoran. These are just energy companies, and then he has Garrett and a lot of industrial material type of companies. But if I go here to his smaller position, he's gonna show up with some interesting stuff. He has Grab Holdings, which is a software company in Asia and emerging markets. Actually, let's take a look at the definition. Grab. That's a very interesting pick. Grab Holding engages in provision of super apps in Cambodia, Indonesia, Malaysia, Myanmar, the Philippines, Singapore, Thailand. So a lot of countries. Probably has a lot of leeway ahead of it if it does manage to grow and do the right things. I have it under my radar, but right now I don't fully understand what's going on with it, and yeah, I'm not really sure about the numbers. All of the numbers are looking good. Margin improving. They're almost profitable. Yeah, but there are a lot of other things going into investment other than numbers. You have to think about the prospects of the future for the company. Try to make a decision based on if you think they're gonna have high chance of success in that area. Think about the moat and everything, the debt levels, competitors, and so on and so forth. What else does he have here? Beke. I am invested in this, not by a lot, but I do own KWeb, and KWeb, I think I own in this individual stock as well. But yeah, KWeb is gonna have a lot of these holdings from China. YNM is also gonna be in there in the KWeb ETF. What else is interesting? Magnachip, C Limited as well. Magnachip. I'm a semiconductor guy. I love the semiconductor industry. Magnachip. It's very interesting for me to see this because I always thought Magnachip is kind of yucky. It's just been going down by a lot, almost 90%. But yeah, I don't know. Maybe it's time. I mean, I haven't looked at it in many years because it just looked horrible a couple of years ago. But yeah, it seems like it's been stabilizing in price. I might just have to take a look at the fundamentals to see what's going on. Magnachip. Does it show some kind of life in? No. Yeah, I don't want to see that. Share changes. Wow. Hold on a minute. 2022 -6%, -8, -8, -5. Hold on a minute. They've been buying back a huge amount of shares with what money? Let's take a look at the balance sheet. Yeah, they had a bunch of money. They raised a lot of capital until 2021. They diluted. They still have 100 million for $100 million market cap company in the semiconductor industry. That's very interesting. Let's see the cash flow. Repurchase of common stock. Yeah, $10 million is not a lot, but it's obviously 10% of the company. Last year, 13 million. 2023, 50 million. Yeah, I don't know. I wouldn't really consider this a huge green flag because for such a small company, I mean, just keep your money and try to grow your company. Just reinvest in the company. I mean, you're not growing the top line, so why are you buying back shares? Just focus on growing the company. I don't really like to see stock buybacks from companies that are not growing. It just makes no sense. Yeah, sure, if you're a very mature cash cow when you're already very profitable, but yeah, I mean, they have negative return on capital invested. So what are we talking about? I don't like to see share buybacks in this situation. So yeah, I'm not gonna touch it. Anyway, so that was Howard Marks. I always take a quick look at what's been going on with him. But yeah, let's move on to my favorite investor, super investor. I used to have David Tepper as my favorite super investor, but Seth Klarman now is my number one guy. He doesn't outperform David Tepper, but I just love some of his latest interviews on YouTube, and he's been kind of a quiet guy in the past few decades, but he's been coming out into the light lately, and I like how he talks about investments, and I love his book. You should check it out. Margin of Safety. Portfolio value $4 billion. I don't think that's. I think he manages a lot more money than this, but he might just be invested in emerging markets. I'm not really sure. Willis Tower Watson. I'm very interested in this type of even though I don't fully understand insurance companies, I think there's a lot of money to be made in insurance stocks. I'm still trying to learn about them, but yeah, I see he has reduced his position, probably taking profits because this has been a great outperformer. Added 42% to CRH. I don't know what this company is. Let me remember. CRH PLC. Yeah, some kind of yeah, building materials. Yeah, that's why I don't care about it. Materials are not in my investable universe because they're very cyclical in nature. You have to get in at the right moment. And if you don't buy when the time is right, you're just gonna massively underperform the S&P 500. But yeah, he's doing a lot of hedging. He's extremely diversified. I don't really go for extreme diversification because I'm still very young and I'm trying to grow as fast as possible. Dollar General, he has added to dollar. This is a very interesting move because Dollar General dropped in price by more than 80% or so. Some point, let's see. Actually, no, I'm confused. Yeah, 70%. Dollar Tree. There are some other type of stores like this that drop by a lot. So it dropped by 70%. He has picked it up. Since when he has owned this? Let's see. Yeah, so Q3 2023, Q2 2023, Q2 yeah, he's bought it around here, dipped some more. Did he add into it? Oh, he sold completely later. I think he made a lot of profit actually. He might have bought in here low and sold it later. Yeah, I think he made a lot of profit and then it dropped again, as you can see here. And bought it again at 84. Reported price could have been much lower than 84. But yeah, I mean, this guy is a tank, is a machine. I think he made quite a lot of profit on this trade. Yeah, interesting to see. Fiserv and Elevance Health. Now, Elevance Health, I'm extremely interested because it's been dropping like a rock. And I do own United Health, and Elevance is like the next big competitor to UNH, I think. And this stock has also been plummeting right like a rock, dropping like a falling knife, shaved off more than 50% off its price. So we are very close to the low here. I might still open a position. I might take some profit from some other stocks that I have and allocate a bit of position here in Elevance. But I'm already invested in UNH, so it's not. I don't think it's gonna make a lot of difference, either if I'm invested in Elevance or UNH. I don't think it's. But Fiserv as well. I'm very interested in this type of company because it's been going down quite a bit. I think more than 40%. Yeah, I don't know what's going on here with the graph. Fiserv, yeah, we're gonna take a look. Yeah, minus 43%. Let's look on stock analysis. Maybe the graph looks better here. Yeah, so as you can see, it's been also falling like a rock since the beginning of this year. Yeah, I don't know when this is gonna bottom. It doesn't look like it's gonna be here. So the price is now 133. Used to be 133 December 2023 here. Not a lot of action here. I don't see any zigzagging. It's just pulled right through it, but I do see some other points. Yeah, the top of 2021 was 126, and then the top in 2023 here before dipping a bit was 128. So I think, yeah, maybe it's not gonna have any type of support at this level, but who knows. I think it's a decent entry point right now, and I might take a look to open a position. Let me look at this news. Drop like a rock, drop like a rock, drop like a rock, bam, bam, bam. I mean, this is already very interesting, and yeah, it's been coming down a lot in valuation. Let's take a look at free cash flow yield just quickly. 7%. I mean, yeah, it was already pretty cheap even before, trading between 4 and 5%, and I think all metrics are a bit better than the S&P 500 average. But now it's sitting at 7%. I like it. I might look into it some more and decide on it later. Let's see what's going on here. PagSeguro. I do have StoneCo, and StoneCo is the same kind of company from Brazil. They're competitors, and I think, yeah, let's just compare them real quick. StoneCo has been going up quite a lot this year at least. Yeah, they were down on this year quite a bit, 40%, 50% for PagSeguro. And they are still down tremendously from all-time high. I think even now today, looking at this graph, they're down like more than 80% still. And actually, no. StoneCo is down. Yeah, it is. More than 80%. Yeah, 85% and StoneCo. StoneCo used to show up in Warren Buffett's portfolio as well, so that's why I went with StoneCo instead of PagSeguro. It's a little bit more credible, even though no matter how much you take a look at the numbers, I mean, it's Brazil. I don't know, but Brazil, Venezuela, anything can happen in these type of communist countries. Yeah, nothing is sure. It would have been interesting in April here when they had this massive drop to buy into it again. I also own dLocal, which is quite similar to these type of companies. dLocal operates in Africa. They have a lot of activity in Africa compared to South America. And then another interesting company, payment processing and credit services company, is Kaspi. Kaspi is from Kazakhstan, but they're expanding into neighboring countries as well. So since July 2024, it's been going down 44%. I'm not seeing the full graph here. Let's see on the France stock exchange. Yeah, still quite a bit lower from all-time high, but Kaspi is a much bigger company, 18 billion US dollars. Yeah, 18 billion dollars for some company in fucking Kazakhstan. I don't know what to say. But yeah, these other companies, StoneCo, dLocal, and PagSeguro, I think they have a lot of potential and a lot of growth potential. They have room to grow by a lot because, I mean, look at this. Let's take a look. StoneCo is around $4 billion in market cap right now, and it used to be more than 30 billion. But obviously the valuation was absurd. So yeah, they're 4 billion right now. Used to be 2.3 billion at the bottom. 26 billion in 2020. Let's take a look at PagSeguro. dLocal real quick. 16 billion, now 14, now 4 billion. Yeah, I think you still can have great opportunities here. Same with PagSeguro. But yeah, if I'm gonna buy something between PagSeguro and StoneCo, I think it's gonna be StoneCo. But yeah, great to see that it's a little bit more assuring to see PagSeguro as a buy in Seth Klarman's portfolio. Obviously, he's a very competent guy when it comes to detecting frauds. So it removes some more doubt that I had about this company. And yeah, I think that was it. I'm gonna end the video here.